Tesla is betting all its chips on a bold move that could redefine the future of the company and the electric vehicle market as a whole. After years of promises, delays, and strategy shifts, the long-awaited $25,000 Tesla, known internally as Project Redwood, finally appears to be materializing on the horizon, with production scheduled for late 2025. This isn't just another model in the manufacturer's lineup. It represents Elon Musk's last major play to recapture markets where Tesla has been losing ground. Since 2020, when Musk first announced the intention to produce a truly affordable electric vehicle, the path has been anything but linear. The project was initially announced with enthusiasm, then placed on indefinite hold, and finally resurrected amid growing concerns about the company's sales performance. During the earnings call in January 2025, Musk, acknowledging his tendency to be overly optimistic with timelines, stated, "Our current schedule indicates that we will begin production towards the end of 2025, and promised that the team would be practically sleeping on the production line to meet this goal. The urgency is understandable." Tesla recorded a drop in sales from 1,145,985 units in 2023 to 1,173,442 in 2024, a worrying sign for a company that built its reputation on explosive growth. Meanwhile, traditional competitors and new entrants continue to advance in the electric vehicle space, eroding the advantage that Tesla once enjoyed almost unopposed. The production plan for the affordable vehicle has evolved significantly. Initially, Gigafactory Mexico was positioned as the primary manufacturing location, aligning with the cost reduction strategy through cheaper labor. Subsequently, plans shifted to Gigafactory Texas, possibly due to logistical challenges and political considerations. More recently, Gigafactory Berlin has been added to the production plan, specifically targeting European markets, where consumers traditionally value compact and affordable vehicles. This multi-factory approach suggests that Tesla is planning a coordinated global launch, with production facilities strategically positioned to serve different regional markets. The company has informed suppliers that it wants to start production of the Redwood model around June 2025, with an ambitious target of 10,000 vehicles per week for this model alone. What we know about the vehicle itself remains limited, but some key features have begun to emerge. The future Model Q, as some call it, is expected to be a derivative of the Model Y, designed to be approximately 15% smaller and 30% lighter, with an overall length of about 4 meters. Described as a compact crossover by some sources, it seems it will maintain Tesla's popular SUV styling in a smaller package. Production costs are projected to be about half that of the Model 3, indicating significant potential for cost reduction that would enable the $25,000 price point. This reduction appears to be the result of both design simplification and manufacturing innovations. During Tesla's shareholder meeting in May, Musk described the upcoming affordable models as having design and manufacturing processes significantly advanced compared to anything currently available in the industry. The strategic importance of this vehicle can hardly be overstated. Currently, Tesla's most affordable option is the Model 3 sedan, which starts at $38,990 in the US, putting it out of reach for many potential electric vehicle buyers. The significant price gap between existing models and the proposed $25,000 vehicle represents an opportunity to tap into a much larger market segment. Tesla has set a target of producing nearly 3 million units annually, representing over a 60% increase from 2024 production levels. Achieving this ambitious goal will likely depend heavily on the success of the new affordable model. Musk has positioned the affordable Tesla as heralding return to high growth for slumping EV maker. However, there are reasons for skepticism about Tesla's ability to deliver on its promises. The company has a history of missing production and pricing targets. The Cybertruck, for example, faced significant delays and ultimately launched at a starting price of $6,990 in the US, 50% higher than Musk's initial projection from 2019. Industry observers have noted this pattern, with one source remarking, "They have been overly optimistic about most of their new product launches. Volume production is more likely to commence in 2026. Achieving profitability from lower-cost electric vehicles presents significant challenges due to battery expenses and the traditional difficulties associated with manufacturing quality, affordable cars." Tesla has reportedly been studying competitors like Honda, even disassembling a Civic, which starts at $23,950 in the US, to analyze methods for producing less expensive vehicles. The potential market impact goes far beyond Tesla's sales. One of the most persistent arguments against electric vehicle adoption remains affordability. While Tesla has been driving down average transaction prices in the EV sector, there are still very few electric vehicles that consumers consider truly affordable. A $25,000 Tesla could significantly change this perception and accelerate EV adoption. The expansion of production to Gigafactory Berlin specifically targets European consumers' appetite for smaller cars and affordable, sustainable mobility. This regional customization strategy suggests Tesla is becoming more sophisticated in its approach to different markets, moving beyond a one-size-fits-all product strategy. For American consumers, the timing couldn't be more critical. With electric vehicle tax credits constantly changing and growing concern about living costs, a truly affordable Tesla could democratize electric vehicle ownership in a way that no other product has managed so far. On American roads, where large pickups and SUVs dominate, a compact and affordable Tesla crossover could create a new market segment that combines environmental consciousness with economic practicality. The challenge for Tesla will be balancing affordability with profitability. The traditionally narrow profit margins on lower-priced vehicles mean that the company will need significantly higher volumes to compensate. The target of 10,000 units weekly suggests that Tesla understands this basic mathematical reality, but executing this strategy will require operational discipline that hasn't always been the company's strong suit. Suppliers are already preparing for the production increase, although some privately express skepticism about Tesla's ability to meet its cost targets without compromising quality. One chassis component supplier anonymously commented that the cost targets are extremely aggressive, perhaps unrealistic, but Tesla has a track record of forcing the industry to rethink what's possible. If successful, Tesla's $25,000 electric vehicle has the potential to redefine mainstream vehicle ownership and propel global EV adoption to new heights, cementing Tesla's position as the leading electric vehicle manufacturer despite increasing competition. For American and European consumers, this could finally represent the tipping point where electric vehicles become not just an environmentally conscious choice, but also an economically sensible one. The success of this model could also have far-reaching implications for charging infrastructure, government policies, and even the power grid, as a much larger number of consumers transition to electric mobility. American cities, many already struggling with aging infrastructure, would face additional pressure to expand public charging options. In the end, the $25,000 Tesla represents more than just another model in the company's lineup. It's potentially a transformative product for both Tesla and the broader electric vehicle market. It's Musk's last major play to capture growth momentum and solidify Tesla's legacy as the company that truly democratized electric vehicles. The clock is ticking, and the next 12 months will determine whether this vision will become reality or join the list of Tesla's ambitious promises that didn't fully materialize.